Let's check in now with pro trader Alan Knuckman, the chief market strategist at Paradigm, joining us from the SIBO trading floor. Good to see you there, Alan.
Hello, Angie. You can see we're back in business. Monday and Tuesday, we saw a bounce from the bottom, 5% to build up.
You actually have a big winner to talk about because you positioned early with options in Twitter, and that stock soared this week on a report that Elon Musk is back to buying the social media site.
All right, let's talk about the power of options. The options play and persistence. You've got to trust what you see. We did this in Twitter in April. It had a boom to the upside. Again this week, Twitter rallied. We had a 50% profit on our first half and 100% profit on the second half of our position on Tuesday when nobody was a believer. You've got to follow your signals, and you want to trade with limited risk and have the time to be right on.
Tell us about your new trade. It's a Chinese travel stock, and again, a play where you're watching the so-called smart money and getting into position early.
All right, today's trade trigger is in Trip.com. Now, this is a stock that's been strong. It's above its 200-day moving average, and it's been trading between 25 and 30 for 3 full months. A breakout of that range targets 35. Now, in the big picture, the stock's been between 20 and 30, so it's actually set up for a bigger breakout if we can follow through here. We're seeing some bullish, leveraged buying in this stock. So I'm looking at the January option, the January 25 call. Again, 25 is the midpoint of this year-long 20 to 30 range. So the 25 call has 3 months of time. It's trading for about 6.5. It's $5 in the money. So again, the stock substitution strategy, a deep in the money option that's going to act like the stock. And again, if we get to that measured move target of 35, that option gains more than 75%.
What are your trading day takeaways, Alan?
All right, trading takeaway number 1. We're above the June gloom, for now anyways. So we continue to make new lows. But the VIX actually, on Friday, when the market was at new lows, was negative on the day, and bullish divergence long, long a ways from those January highs. Number 2, 10 turn. The 10-year note yield, which everybody follows, peaked at 4% in the recent times here. Now it dropped 10% very quickly, and we saw the dollar dive as well. Number 3, earnings pump. Let's remember, it wasn't so long ago the markets were about 20% higher in August. That rallied to 4,300 in the S&P. That halted when earnings season stopped. Now we've got a new catalyst in just a week.
Thank you for your Trader Talk, Alan.
Thank you.
Go to businessfirstam.com for where to see our show on TV.